So, in today's video, I want to share with you the biggest reason why most traders fail. And I'm going to tell you, right, it's nothing to do with your risk management. It's nothing to do with your trading psychology. Okay, it's nothing to do with, cutting your losses and riding your profits. Okay, those stuff, right, they are important, but they are not the most important factor. The most important factor, right, is this. Why most traders fail is because you don't have an edge in the markets. So what is an edge? Okay, so I'll explain. An edge is something that you do repeatedly over time, right? And it generates a positive outcome, a positive expectancy. For example, if you toss a coin, let's say every time you toss a coin, it comes up head, you win $1. Every time it comes up tail, you lose $1. In this scenario, right, you don't have an edge in the markets because it's 50-50, right? Head or tail, and each time you win $1, and each time you lose $1. So in this case, you don't have an edge in that coin toss. But now, this time around, let's say again, we are doing the same coin toss, but this time around, again, heads, you win $2. And when it comes up tail, you lose $1. In this case, right, when you toss the coin, the more coin that you toss, you can see that clearly you have a positive expectancy, a positive edge in the markets, because the more coin that you toss, the more money you'll make. And it's the same for trading. You must have an edge in the markets, because without an edge, right, having the best psychology, the best risk management, yada yada, is not going to change things at all. Okay, so if you don't believe me, let me prove it to you. I'm going to, backtest a trading strategy, and the strategy goes something like this, right? I'll go long, right, when the price closes the highest over the last 200 days. So this is like a breakout trading strategy, a trend trading strategy. Okay, we'll use a 3 ATR as our trailing stop loss with a 1% risk per trade. Okay, so you can see that this is somewhat of a breakout trend trading strategy. We cut our losses, we ride our profits, we have proper risk management. Okay. And this is the short side, just the opposite of the long side. The markets that we trade, right, is the S&P 500, gold, euro yen, UST bond, and heating oil. So it's over 18 years from 2000 to 2017. And here are the results, right, of this trading strategy. Number of trades, 236. Winning rate, about 41.53%. Profit factor, 1.48. With an annual return of 1.78% and a maximum drawdown of 9.35%. And on month-on-month, year-on-year basis, this is the results. And from the looks of it, right, this trading strategy doesn't beat the markets. In fact, if you just buy the S&P 500, you buy and hold it, that would actually offer a better return than what you're seeing right now. So clearly, this trading strategy doesn't have an edge in the markets, right? You actually, if you think about this, right, this strategy followed, what the textbooks, the guru, the forum would tell you, right? Trade with the trend, cut your losses, ride your profits. You did all of that, and still, it doesn't have an edge in the markets. Okay? So I hope this awakes you to what it really takes to succeed in the markets. Without an edge, it's useless, right? It's like, trying to be a bodybuilder, right? You can inject all the steroids you want, you can eat all you want, right? But if you don't lift a single weight, you're not going to build a single damn bit of muscle on you, right? You must lift weights in order to build muscles. And it's the same for trading, right? You must have an edge if you want to find or you want to generate, positive profits or outcome. Okay? So now, brings the question, right? You might be thinking, okay, Rayner, I agree with all this, right? It's easy, right? I know, find an edge and stuff like that. But the question is, how do I find an edge in the markets? Right? That's what you're probably thinking right now, right? So, okay, let me help you with it, right? In fact, let me even spoon feed you, right, on how you can go about finding an edge in the markets. And the easiest way, to me, right, based on, over the last 10 years of trading, I find that the easiest way to find an edge in the markets is this. Go and read trading books that offer you strategies with back-tested results. I don't mean trading books that, talk about head and shoulders pattern, candlestick patterns, because those patterns, right, it's hard to verify whether it works or not. In fact, you want to be reading books that explicitly, right, tells you, right, what is the exact trading strategy, and then they provide the details, the statistics, the numbers, right, to back up that strategy. And these are a few books, right, that you can consider reading, right, that I've listed over here. You can screenshot this, right, pause the video, write it down somewhere, buy these books or borrow from the library, I don't know, whatever works for you. But these are the few books, right, that, will give you an edge in the markets. In fact, you don't even have to reinvent the wheel. If you want to be lazy, right, you can just so-called copy the strategy and just trade it on your own. Although I don't recommend that, right? But if you really want to go down that route, right, that's possible. Okay? So that is I would say the first and foremost, right, the so-called easiest way to go about to find an edge in the markets. Second way, an alternate approach, right? I've actually used this both approach myself, but the second approach is this, right? This is more for traders who are more of a price action trader, discretionary trader. What you want to do first is number one, observe the market patterns. Maybe you've been watching the markets for quite a while. You notice that a certain pattern tends to exhibit consistently over time. Okay, then what you want to do is to then adopt this DERR approach, the DERR method, right? So first and foremost, let's say you observe a pattern that looks like this. Maybe the market is, every time it's in a range, you notice that every time it breaks above the highs and reverse and close back into the range, you notice that there's a good chance, right, that the market could come down lower and retest back this area of support. So this could actually be a specific market pattern, price pattern, or trading setup that you could look to trade in future and see whether you have an edge in the markets. But first, right, you don't want to conclude that, hey, this has an edge. You don't want to do that immediately, because you want to put it through a vet through, or put it through a series of tests, right? And this test is under this 4-step framework, the develop, execute, record, and review framework. Let me explain how you can go about doing it. So what you'll do is, first and foremost, right, the DERR method, you want to develop a trading strategy around the pattern that you have observed. Like, say, for example, you notice that earlier, let's say, for example, you notice that the market every time is in a range, okay, it breaks above the highs and then close lower, right? This pattern, you want to quantify this pattern. You want to ask yourself, under what market conditions would you trade this pattern? Maybe the market must be in a range. Okay, maybe the market must be in a downtrend, or maybe you would even be fine with it even if the market is in an uptrend. You want to define the exact market condition to trade this pattern. That's the first thing. Second thing, entry trigger. What is the exact entry trigger you're looking for? Is it just simply a lower close? Or maybe you're looking for a shooting star. Maybe you're looking for a bearish engulfing pattern. Whatever the case is, you want to define the specific entry trigger that you're looking for. Okay, and then enter the trade. Are you going to enter the next candles open, and etc. Exits, right? Exits can be boiled down into two parts. Number one, where will you put your stop loss? Are you going to put your stop loss just above these highs? Or maybe you're going to give it some buffer and put it slightly above, somewhere here. Okay? The second part is, where will you exit your winning trade? Are you going to, look to capture a swing in the market? Maybe if the market just swings down lower, right, you look to exit near this area of support. Or maybe you're going to go with a trailing stop loss technique, where you'll trail your stop loss and see how far the trend can go. Okay? Next, your risk management. How much are you going to risk on this trade? 1% of your account? 2%? 0.5%? Again, you have to define it. And lastly, right, the markets that you're trading. What markets are you trading? Forex, bonds, futures? I don't know. What markets are you trading? And there's one last thing which I didn't include here, but you can include as well, is your time frame. What is the time frame you're trading? Daily time frame, 4 hour, right? So this is the developed part of your trading strategy, how you would go about developing your strategy. And these are the questions that you must answer and define. The second part of it is the execute part. I suggest, right, executing a minimum of 100 of such trading setup. The reason is because in the short run, your trading strategy or your trading results are random. And it's only in the long run, right, where it will be aligned towards its expectancy. For example, in the short run, you toss a coin, you say you toss it 6 times. It will not be 3 head, 3 tail. It could be 4 head, 2 tail, 5 head, 1 tail, right? But if you toss it 1,000 times, then you'll be, chances are, close to 500 heads, 500 tails. So you can see that the more times you toss the coin, the more times you place your trade, the closer you will align to your expectancy. Third thing you want to do is to record the trades, right? Record the results of your trade. Importantly, what's the average profit? What is the average loss? What is the win rate, right? Once you have all these details, right? Win rate, losing rate, average profit, average loss. Then from then on, you can compute and find out whether, right, you have an edge in the markets, whether it generates, right, a positive outcome for you based on whatever pattern you're trading. And finally, you want to, do the review, right? That's what I've said earlier, to, find out whether, it offers you an edge in the market. So this is the DERR method that I want to share with you. Another approach that you can use, right, to find an edge in the markets. Okay? So with that said, right, let's do a quick recap to what you've learned today. Number one, you must have an edge in the markets. There is no two ways about it, as what I've just shared with you. Number two, if you want to, so-called shortcut your learning curve, what you can do is to read trading books with backtested results. I shared with you a list of trading books, right? They are not everything out there, but there are a few books that you can get started with, right? Okay? And finally, right, we talk about the DERR method, right, that you can use to, extract or find your edge in the markets as well. Okay, so I've come towards the end of this video, but if you want to learn more about my trading strategies, techniques and methodology, what you can do is go down to my website, tradingwithrayner.com over here. Okay, then just scroll down a little bit, right? Depending what you want to learn, right? If you want to learn how to write massive trends and market, profit in bull and bear markets, go and download the ultimate trend following guide, right? By clicking this blue button over here. Or maybe if you want to learn how to better time your entries and exits, right? Learn more about market structures, support resistance, price action trading, then go and download the ultimate guide to price action trading by clicking this blue button over here. I'll send it to your inbox and it's completely free. Okay, so with that said, I have come towards the end of this video. If you've enjoyed it, hit the thumbs up button, subscribe to my YouTube channel by clicking the link below. And any questions, feedback and comment, let me know below and I'll get back to you and do my best to help. With that said, right, I'll talk to you soon.